Hi, I'm Jeannie Kelly, your credit coach, and I'm excited to have Jamie Tyndall with us today, who's a loan officer. And I'm really excited to have you on here. We've been working together for years. And Jamie, welcome.
Thank you, Jeannie. I'm honored to be a part of your podcast. I've been watching them forever. And you know what? You do the best job of getting really solid people on. And that's
Oh,
that's always great to see.
well, the circle, the
Yeah.
fabulous circle, right? Who we surround ourselves with. So thank you so much. I wanted to know, because I don't know this, how did you ever get into the mortgage industry?
Sort of fun. No one, I don't think anyone says, oh, I think I'll be a mortgage loan officer. That's, not your calling in life. So I was buying a house in 1998. I was
Okay.
determined that the mortgage person was going to screw me. Hope I can say that, but,
Yeah.
and that was that era. And back in that era, it was like the Wild West. So I pretty much taught myself the business. And at the end of the process, I at that time was not employed. When I was about to take a job trading gold, and
Huh.
the person who owned the company, the mortgage company, said, "Would you want to be a mortgage loan officer?" And I'm like, "Why?" And he goes, "You know everything, you just don't know the acronyms. All the." And I said, "Okay." It was literally that sort of random. And he said, "Your territory will be Westchester." I live in Greenwich, Connecticut. I just moved there. So I was like, "Where's that?" And he goes, "The Westchester Mall." And I'm like, "Okay." And off the deep end I went.
How that I love that.
And
Sometimes we fall into things, right? And they're the best things.
no, and it was funny because it was like the first year, because I knew I had all this knowledge. Had a Wall Street background before, so I had knowledge of like
Okay.
the numbers and all that. I have a bachelor of philosophy, so I like people. That's my
Okay.
shtick. So it's like combining the two. And it was just, how did you get clients? And back in that day, it was easier to find your niche market because you just walked into offices and could
Right.
actually see people face to face. Whereas today, I think it's harder for loan officers because if you walk into an office, they already have an agreement or they aren't there because they don't need to be there.
Right.
Back then, there
Yeah.
wasn't even a cell phone. I think we still we vaguely had cell phones. We might
Yeah.
it was
Exactly. Right? No,
we had
I
the rate
talk
sheets.
about it.
Yeah,
Yeah.
you talk about like the rate sheet and I mean,
Yes.
you had a cell phone just to like call. You didn't. There was no texting on the phone. There were no pictures or yeah. I mean, it sounds funny, but people listening to this don't are like, what? What are those old
Yeah.
ladies talking about?
No, I know. I talk about the yellow pages, like maybe that's how we met, because
Yeah.
I would go through the yellow pages and I'd start with mortgage lenders. I'd start in A, end up and just start over again the next week, leave the messages and just continue that way. And it's a little different now.
I love that story, but no, it's
Yeah.
true. You did have all these things that just seemed like what? Or when I'd
Yeah.
be driving up to Westchester, I business really started in Rye and then Katona, and I had like the map, like the maps where
Yeah.
you're like, wait, where am I going? And you're trying to figure out where you're going because there was no GPS. So thank
Yes.
God for that now. But I
Oh
remember always the
yeah. Don't
maps
you
and
love it?
yeah, and then someone's trying to tell you some shortcut. You're like, please don't.
Yeah, no, punch it in and follow away.
Yeah.
Listen, now for mortgages, do you only work in New York and Connecticut, or what states are you licensed in?
So Loan Depot is licensed in all 50 states. So
Okay.
if there's any client, if I'm not licensed in a state, I can refer them and still be hand holding them. And I send them to only people who I know. I don't just say, you're now working with person in Washington who I don't know. I'm
Okay.
personally licensed in 8 states:
Hmm.
Connecticut, New York, New Jersey, Florida, California, Massachusetts, Rhode Island, and we're missing one.
Did you say New
Tri-state in the
Jersey?
New Jersey. Yeah, if I didn't say
Okay.
that. So tri-state, Massachusetts, I know Florida, Connecticut, or Florida, California, and then Rhode Island.
Nice. Okay. So what are you finding right now in your industry? Like, what's the challenge?
I mean, the challenge is it's the obvious statement that everyone who refinanced their home, who owned a home already, refinanced their home, and they have 2 or 3% rates. I think the
Mhm.
statistic is, I it's something like 40% of Americans have an under 4% rate, or something like under 60% of Americans have under a 4% rate, and 30% or something under a 3%.
Okay.
So when you have that many households that have a low interest rate, they may want to move. Maybe they said, oh, we for a reason, or want reason, whatever. But they had this great interest rate. And then they see interest rates today that are in the 5s, 6s, 7s, not right now, but was.
Right.
Then they don't want to move. Now I'm a new homeowner. I would like to buy that person's home, but they don't want to sell. So it's just this sort of ongoing circular stalemate. Now, meanwhile, my rent is increasing just today.
Mhm.
Or I think in recent events, you see articles on rents increase. My
Right.
rent is increasing. This person who's living here, their housing price is super low.
Right.
They want to move here and they can afford to move here. But it's
Mhm.
like, do I want that? And they know, to me, sometimes it almost builds up a weird circle of the, I don't want, I hesitate to say the wealthy can move, because if this person who has a low rate can move into the higher with the hope that, again, hope that rates will
Right.
fall in the next couple of years,
Mhm.
they have a wealth factor built in that they can afford this high rate to wait for this.
Okay.
And a newer homeowner might not have that, or they
Mhm.
had to lower their expectation um,
Right.
in the home purchase. So it just creates this sort of circle where you've got to start either giving up things or stretching a little bit and figuring out ways to save, ways to improve your credit, or something that
Right.
is within your credit, for example, that you
Mhm.
could maybe cut out, or lower a payment to then put it toward the housing payment.
Right. Yeah. No, it's definitely
It's
difficult times, but when it comes to rates, I'm looking at them. Obviously, I know they're up from where they were,
yeah,
but when I bought my first home, I think my rate was 9, 10%. So I'm still saying we're ahead of those times, which are our parents' times, right? And things
yeah,
like that. Actually, my parents, even it was higher.
yeah. They
So
all our parents had the 18%. We
right.
started out my first house. I had an adjustable because I couldn't afford a fixed.
Yeah.
But adjustables were more common then. They're not really as common now.
Okay.
So I had, like, I remember a 5 1/4.
Right.
And then, but that was high back then.
Hmm.
But that was an arm. If you did a a fixed, it was way, way higher.
Right.
Um, the thing that people don't realize, and it's hard to, you don't want to talk to people who are now buying their homes and say, well, back 20 years ago. But I can say within 10 years, I have sold 8% rates.
Hmm.
And the reminder is 30-year fixed. I think seven
Hmm.
and seven eighths is the highest I had, but I always had the 8 1/4 was also out there.
Okay.
Um, for me, I just always remember and remind people, if rates are higher, that means your savings accounts and interest rates are overall higher. You're earning more money on your money. We've gone through an extraordinary time where people are used to having no interest or no CDs. Like, a lot of younger people don't realize what a certificate of deposit is, a CD, or a bank account that pays you money other than 0.00 something.
Right.
Now suddenly it's like, oh my gosh, a CD, or just simple cash FDIC insured vehicles pay you 4 and 5%.
Yes.
Right. So when we had these mortgage rates that were in the 5s, 6s, 7s, we also had vehicles that we were earning money. And
Right.
I don't think that connection has been made yet for some people who are like, oh, now we're earning something too.
Right. Yeah.
I think it's a little bit of a hazy a lost factor on a
Yeah.
lot of people.
Yeah. And I really, listen, the rate is what the rate is. And if you have to move and you're lucky enough to find that home, I really, again, because there was a time I was paying 9%, I still think I'm winning, you know?
Well,
So,
if you can do it, I mean, there's so many programs where, I mean, for example, the if you're a veteran,
mhm.
0% down to any loan amount.
Wow.
You want to buy a $3 million home and put 0% down? Welcome to your home. So first of all, veterans, very underutilized program, and there are a lot of people who don't realize you don't have to be active military. You could have been called up. You could have been a National Guard, and by the way, all through COVID, you were active duty. A lot of you were called. A lot were called up. You
Okay.
have to have served a certain amount of time active, but a lot of that active does qualify you because you've been called up for all sorts of emergencies recently.
Okay.
It's something I ask every client because that's your that's your slam dunk.
Yeah.
If you're We live in a high cost area. It's
Hmm.
hard to save. I just said you're paying whatever in rent. You also would like to go out and see movies and plays. And if you're in New York City or New York City like we are, you should. You should live your
Right.
life and gain memories. You shouldn't just be gaining savings. You should also be gaining memories for yourself.
Hmm.
And I'm not going to ever judge any client who says, I have limited savings, but I have a wealth of memories. That's
Oh, I love
awesome.
that.
I
Yeah.
I have no, I'm like, right.
Right.
So we can get you in if you're a veteran, there are certain programs that are 3% down, 3.5, 5. We have jumbo, which is this area, a lot of
Okay.
larger size loans. We can finance up to, I think it's you can put 10% down. So
Okay.
there are ways to get in homes that mom and dad didn't do, or that in your head you might be saying something. It's about the phone call. It's just like with credit. People are scared of a judgment.
Hmm.
And
Right.
I'm not here to judge. I'm here to solve for yes.
Right. Yeah.
You're in your business. You're there to solve for yes. You're not like, well, why didn't you pay your car loan? If
Right.
there's a story, you can tell it to me, but I don't really need to know it per se, unless it involves why I need to solve for yes. But I just am here to help you. So
Right. Yeah.
tell me
Absolutely.
your story. Tell me what you want to pay, and let's see if we can make that happen. And there we go.
Right. And learning those things. And again, knowing you're obviously you've been doing this so long, you know about all the special programs, the veterans. And is there anything for first time home buyers?
First time home buyers have sort of a wealth of programs. A lot of them are income based. And
Okay.
in this area, again, the tri-state people's incomes are higher than, so they don't qualify for the income based programs. But yes,
Okay.
there are first time home buyer programs that we have, some that are income based, ones that aren't, that if you're first time home buyers will wipe out all sorts of fees for you.
Hmm,
Um,
that's great.
Again, that income, non-income, and then yeah, and then otherwise it's just more not first time home buyer based. It's
Right.
just
Depending on
it's
location.
just we can yeah, it's just we can do higher loan to values. So if you've heard of a program, sometimes that program actually costs more. Like
Wow.
FHA loans
Hmm.
tend to be more expensive. They have upfront mortgage insurance and finance mortgage insurance. If I can
Okay.
get you into a program other than FHA, your payment will likely be lower,
Okay.
and I will do that.
Right.
So I love when clients educate themselves. Just like I said, oh, I educated myself when I got in, but you don't know. You're like, oh, I want an FHA. I'm like, why?
Hmm.
I get
Right.
that people tell you what they want, and then my job is to say, you said you wanted this, here's this, but might I suggest a couple other
Right.
things, and you do you, and tell me what's the best.
Right. And obviously, it's always about do the math. It's right. If you are saying you're the expert, I don't, I'm not a loan officer. So if you said, here are the examples, here's this, do the math. How much is coming out of my pocket for monthly? And then also we have to think the big picture, right? Not just monthly. Like, is there something special for 5 years or, 10 years
Right.
and so on? So
I
do the
mean,
math.
you've always got to ask a client. And there are ways that you can and can't ask certain questions, but it's like, are you going to suddenly, I always joke, is Aunt Millie going to die and leave you $1 million? That's going to change your life. You know,
Right.
will you maybe be taking on, something with aging in place with your parents? You've got to factor that in because
Mhm.
I talk to so many clients and I'll say, how old are your kids? And they have forgotten that they're going to have possible tuition.
Right.
I don't think it's really, maybe you don't want to take an adjustable rate mortgage if in that year that you're going to adjust, you're also going to be paying kids college tuitions. Maybe you
Right.
do, but like when you're
Right.
buying a home, you get so I say it starts out as this amazing experience. I'm going to buy a home. I saw Magnolia Street and I'm buying Magnolia Street. And now I pull your credit and there's a J. Crew late and everyone gets all undone. Now I'm calling you on the J. Crew late or something crazy. And now everyone's yelling about that. And then there's something else. And then the anxiety is rolling up. And now I ask for something and you can't find it and you're looking for it. And I'm like, I can just ask your CPA. In
Yeah.
the old days, it seemed like it was a little more calm. And that is because people have to do things very quickly today.
Right.
They have to sign, they find a home, they saw it, they have to bid on it within 24 hours and sign a contract.
Right.
So you turn from this very happy and awesome experience to something that it still is, but it's a little different emotional state that like you and I both have to manage in terms of it's going to happen fast and I'm here to get you through it. And if there's
Exactly.
any type of problem, let's not dwell.
Right. Yeah. And I have that New York attitude very quick and I'm ready to help as fast as possible, but it is true. We're so used to everything's fast paced when it comes to purchasing the home. And it is what it is and we just need to roll with it, right?
Yeah.
And Jamie, let me ask you before we go because I ask every guest, how did you learn about credit?
So I think I am the total geek. I am I'm like you know me, I'm the geekiest of geek people. I always joke, I'm like your authentically boring loan officer. I watched my parents always like saving money, and I'm talking at the earliest age. I mean, that I can remember, I'm talking my teen years. I remember the checkbook, having the checkbook, and I balanced my checkbook every Sunday night.
Aw.
Because that was in the era when you actually wrote checks. Like if you went and
Mhm.
bought, you bought a headband, you went to Papagallo and bought a headband, you wrote a check, or whatever. So I knew from the beginning that my goal was always that. And then when I went from beyond checks to like the credit card,
Right.
that I always wanted to have the money to pay for that bill. So in
That's
my
so great.
head, my personal credit journey was always, if I charge this, I might finance it. Like I might not pay it off, but if I had to, I 100% have the money to pay this. And that got harder as I got old. You buy a sofa.
Mhm.
Oh, it's a couple grand. Oh my God. But I wasn't financing it because I don't think I've ever, other than a car, maybe, that you didn't have like well, even the in a car, I'd be like, if I had to, if the world collapsed, I could pay it off. And that is a result, just sidebar, of 1987 when the market crashed. My parents lost almost all of their money
Mm.
in the stock market crash. It was my first year in college.
Wow.
And they were still able to send us to college, but I ended up finding a way to get Goldman Sachs paid most of my way through college, just by chance. But I learned in that, in going from growing up in what was, when they were upper middle class, now that
Mhm.
doesn't really exist anymore. I was already learning, but I learned fast to have savings and to be able to pay for cash. And that's how I'm almost like a depression baby, a la the the opposite.
Yep. Oh, that's awesome. I mean, congratulations because listen, we all know I messed up and it's so much harder. I
It's
wish, you know what I mean? You always, but it's okay
usually people have
because
the mess up story. I'm well, but again, like people have the mess up story, but I have the story where, I woke up at 2 a.m. every day, went to work, and then went to school full time. So,
right,
sometimes I'd rather have the mess up story where I just didn't pay my student loans. Would have been I would have had a lot more fun.
right.
Maybe I would be more fun, but
You are fun. What are you talking about? You are totally fun. But no, it's great when you can learn. Listen, I wanted to make sure in my home, because of the mistakes I made, that for my family and Cassandra, that she wouldn't have to make those mistakes. She's petrified. She's like, Mom, people don't understand. Like when the electric bill comes in like, I want to pay it right away because she remembers, or not really the electric, it's more the cable bill, where it'd be like, oh, it got turned off. Let me call. I didn't
Right.
pay it.
Yeah, like the
You know,
cable, you're like, whatever. But
right.
for people, I also to children, just if I can quickly say,
Yeah.
I've had so many if any kid out there is listening, or someone, the kid charged something, it's now like the J. Crew gap.
Hmm.
The bill came in, you mom, Jeannie, you didn't know that Cassandra charged this. They then hid the
Right.
bill. Now they're
Mm.
going to go buy a house. Now I run the guy, I'm like, why do you have this $128 bill from that you've never paid? It's in some collection. It was because the daughter, and then your daughter or son hit a bill
Mm.
because they didn't. I have that about once a year.
Mm.
And again,
Bad.
it's not educating. Like, guys, if you charge something, just tell mom or dad. You know,
Right. Oh, yeah.
or tell
Because
your,
then,
or
big
same with
mistake.
spouses. Yeah, or tell your like, hey, I saw a pair, depending on like female, I saw a pair of shoes, I loved them, whatever. You like them too, I'm wearing them. End of story. We can yell about it later, but
Yeah, no. Oh, believe me, I've heard it all. And I have a client in here right now, exactly what you're talking about. So it is very important to, I don't think the kid hid the bill. I just think that the bill never got to them because it was the old address.
right, or they
And
don't know because they're like,
right,
I don't use
exactly.
it, or I didn't buy anything, or I didn't, and you're like,
Right.
what's going on? And then you don't
Yep.
need, it goes back to, we can fix things. We
Yep.
can all fix things.
Yeah, absolutely. So, Jamie, thank you so much. And now on LinkedIn, how do people find? Because I see you on there a lot. So, is it just your name? Is that how they
Yeah,
find you
yeah,
in
it'll
Home
be Jamie
Depot?
Tyndall. And I think my actual, if you type in Jamie Tyndall, there is actually the other Jamie Tyndall is a famous comic artist. So
Ooh,
you type in Jamie Tyndall mortgage or Jamie Tyndall, and Jamie Tyndall mortgage really gets you to all of my social accounts. And
okay,
also
awesome.
just Jamie Tyndall gets you to the comic artist who's won, all sorts of awards. And that's my side hustle, as I say.
Awesome. Well, I'll make sure I put all your links in there. And thank you so much for jumping on today. I really appreciate you so much.
No, I love you, Jeannie. You've been a lifesaver through 25 years. Thank
I
you so
know it.
much. All right.
You got it. Take it easy. Bye.
Bye.